So last class, let me quickly go over it quickly for you. So we define blockchain as a technology. So it's on YouTube. You go on YouTube, you go check it out, right?
Okay.
My channel, my dummy channel.
Okay.
Check it out on my dummy channel. So in the last class, we spoke about blockchain. We started by understanding what blockchain is. We started by knowing the different blockchains that we should engage with.
Okay.
1 minute, I'm coming. I'm trying to bring out. I'm trying to bring out that video for you.
Thank you.
I just send it. But you have the link already now. Because
yes, I have the link. If we are done, I'll just click on the link so that I can watch
exactly,
it.
because I hid that particular link so that it will not be showing on the public domain. So if I have to go down,
okay, don't worry.
Yeah.
Okay, if we are done now, just click on it so that I can watch it.
All right, so we're looking at blockchain as a technology in our last class. Look at blockchain as a technology. We understood where do we find our cryptocurrencies that we want to trade in? So we find our cryptocurrencies that we want to trade in on CoinMarketCap. Now it's as easy as
Where?
on CoinMarketCap choice. You have to mute your background a bit. So mute. So yes. So I will just do a quick rundown for you so that you can quickly catch up. So you want to make money from cryptocurrency from blockchain. The first interest you should have is that what is blockchain? Because billionaires do not actually invest into a technology anyhow. They invest into the knowledge of the technology itself so that they know how to navigate that particular technology very well. So what is blockchain? We learned in our last class that blockchain is an open ledger and an open record. From there, we said, okay, the technology, just because the technology is an open ledger and open record, and you can use the technology to do almost anything across all walks of life, from finance to health to data to agriculture. You can use this technology for a lot of things. But some of us are not just interested in technology. Some of us are also interested in making money. Some of us are also interested in making money. So there are 4 ways to make money with cryptocurrency. Number 1 is to buy and hold. Number 2 is to trade it. You are buying it when it is low. You are selling it when it is high. Number 3 is to accept it as payments for goods and services. You are accepting it as payment for for goods and services. And then there you can also make money from cryptocurrency. Just like if I decide that in this class now, for students to come into this class, they must pay me in cryptocurrency. I'm offering a service. The service is education. And people must pay me with that. So I can earn cryptocurrencies doing that. So let's focus on the second way, which is trading, which means you are buying high and you are selling low. You have to trade across an exchange. You have to trade across an exchange. And what's an exchange? An exchange is a marketplace where you buy and you sell your digital assets. There are a lot of digital exchanges in the world. And on these exchanges, you find cryptocurrencies like Bitcoin, Ethereum, Twitter, BNB, and all of those things. Now, once you are in this community, as you're in this community now, you see that we tell you to buy so and so thing for you to make money. So anytime we tell you to buy something, if we say go and buy Lira, LYRA. If you're going to buy Lira Finance, you search for whatever we said you should go and buy. So you search for the Lira on what? On CoinMarketCap. It's as easy as this basic process that we're going through now, so that you get to where we stopped, so that this becomes like a refresher course for everybody. You click on it. Once you click on it, you'll find the cryptocurrency of your choice that has been called on the Vorem Trade House that you should buy. You know, this your Zoom application now is just the application for our video conferencing, just for us to be able to pass information from one person to another over the internet. You are going to be engaging with other applications that I've told you to download. So on this particular CoinMarketCap, you find the cryptocurrency that I said you should buy. Now, when you search for it, you need to know where will you buy it. Will you buy it in a free market? Will you buy it in Bogologo market? Will you buy it in Yaba market? Will you buy it in Balogun market? What do? You scroll down. When you scroll down, you will see some interesting tabs around this cryptocurrency. You will see some interesting tabs around this cryptocurrency. Those interesting tabs have the place of overview. On the place of overview, what you can see is the chart structure of that particular particular coin on the place of overview. And on that particular chart structure, you can choose the different time frames that is around that particular chart structure. So if I click on this, you saw that I just click on the 1 month chart structure to be able to switch around that particular chart structure. If I click on 1 year, you'll notice that my charts just changed. So this is showing me the structure of Lira Finance from 2021. So from 2021 to 2022. If I click on all-time chart, it will show me how long in total this coin has been in the market. This coin has been in the market from just this time to this time. And I was doing a little bit of research into this coin today, and I think you can find it. Where can you buy it? You can come here. So that's the reason why it's fresh in my head, because I was doing my research on it today, because this is one of the coins I will post in the community very soon. Let me see what it has done in the last 1 day. I want to look at the charts in the last 1 day. I went back to overview. Notice I went back to overview. In the last 1 day, it has rallied up from here up to here. So this is one of the coins I'm looking at for us to be buying in a short space of time. Let's see what it has done in the last in the last 7 days. In the last 7 days, since on the 2nd, it was here, dumped, so it was here. So it has just been going on a sideways movement. On a sideways movement. That type of movement is called a sideways movement. Hi guys, kindly unmute your mic. Kindly mute your mic so that we can hear ourselves. Hi guys, if you come in, please mute your mic. All right. Okay. So you say, okay, and now I know that it is Lira I will buy you. It is Lira that has my money to my to my billions. It is Lira that has my money to my billions. So you now say, okay, which market is Lira trading? Which market is Lira trading? Lira is trading across these different markets. Now, the reason I'm taking you through this, is this. The reason I'm going through this particular route with you now too is because I want to also prepare you and prepare your skill set for the next phase of Ethereum upgrade, or for the next phase of Ethereum, which is the layer 2 Arbitrum protocol. The layer 2 Arbitrum protocol. So once you find this cryptocurrency, you say it is trading on which market? Okay, this is the market is trading on. I need to go and buy this cryptocurrency on this market, so that so that I can make what? I can make money. So what's this cryptocurrency trading around? In cryptocurrency, while trading cryptocurrencies and blockchain assets, you trade it around two things. You trade it around USDT or you trade it around Satoshi. You trade around USDT or you trade around what? Satoshi. Now, over time, we have decided that we must learn what the Satoshi values to be able to what? To be able to understand how we are trading. So if you are trading against USDT, what you are basically doing is that you are saying my money is on $1. I want it to go to $5. I want it to go to $10. I want it to go to $100. It then means you are using the dollar value as a what? As a metric system. If you are trading against USDT, which is USD, you are using the dollar value as a what? As your metric system. If you are trading against Satoshi, now what is Satoshi? If you are trading against Satoshi, who is Satoshi? Satoshi is the guy that invented Bitcoin. So if you are trading against Satoshi, you are using the what? The Satoshi value. So Choice, we established this in our last class, and then we said 1 million Satoshi makes up what? 1 Bitcoin. And we also said a Satoshi value is what? Is made up of 8 decimal numbers. We also said, how do you know this Satoshi that is made up of 8 decimal numbers? If you can see my screen right now, Choice, you will see that I have a particular number, 1, 2, 3, 4, 1, 2, 3, 4, 8 decimal. So in your primary school, they did this 8 decimal number for you. And they said for 100 tens and unit, all you need to do to understand it, you do 1, 2, 3, 1, 2, 3 again, for you to be able to what? Understand this very well. So if I do 0.1, 2, 3, 4, 5, 6, 7, if I do this means what? 1 Satoshi. If I do this means what? Choice, what is this? Please kindly unmute. Choice, please kindly unmute yourself. How many Satoshi is this?
Which one?
The one
200 Satoshi.
out of the next one.
300 Satoshi.
Make it difficult now. In your mind, you are just doing 300 and 200, Abi. All right. I want to do this.
I don't know this one though. Very difficult.
Okay, let's count from the back. 1, 2, 3, 1, 2, 3,
Okay.
How many Satoshi is this now?
I don't know. Something like 90 Satoshi or
same way you did this. This is 90 Satoshi, this is 406,000, this is 9,406,090.
90. Okay.
Yeah, count your 1, 2, 3, 100, 1, 2, 3, 1,000, 1 million, right?
Yes.
So this is 9 million Satoshi. So when you understand this, then we'll quickly move again from there to our platform where we need to analyze the charts. When you understand this, you now know what blockchain is. You know the measurements for it. You know that you can make money from $1 to $7. You know that you can use. So if I say go and buy something at if I say go and buy something at something like this, I said entry point, go and buy something at 0.1234. How many Satoshi is this? How many Satoshi did I tell you to go and buy it at?
Okay.
So go and buy BTC at, or buy Ethereum at so and so Satoshi. How many Satoshi is this one?
30 Satoshi.
No.
No. Oh,
1, 2, 3, comma, 1, 2, 3, comma.
yes.
Oh, yeah.
Okay.
How many
1, 2,
Satoshi is
3,
this?
comma. 1, 2, 3, comma. And
Is there anybody that can help on this particular call? How many Satoshi is this? Is there anybody that can help us out a bit? This means, is there anybody out? Said? 4,030. Okay. Just said 4,030 Satoshi. So do you think that's correct?
okay.
And do you think that's
I
correct?
don't think so. I don't think so.
Okay. Amen, do you think that's correct? Ahmed, do you think that's correct?
Hello.
Yeah, how many do you think this Satoshi number is correct? How many
I didn't
Satoshi?
get what you said.
Complete, yes.
How
I
many
think 10 was
4,000. 4,000.
so I think the value is not, it's supposed to be 90 after the decimal point, but I'm saying just 8.
I know. It's 8 zeros now. Says it's an 8 decimal system. It's an 8 decimal metric system. Have you forgot?
So, yeah.
Okay, yes, I understand now. 4,030.
4,030 what? Satoshi. Choice, you are really close to it. What you need to do, right? For you to get it better is that always count it from the back. So normally, if I delete this comma now, see choice, I want to delete this comma, see how it's, you see, it is looking very normal and solid. So this is 4,030 what? Satoshi. How do you know that is 4,030 Satoshi? From the back, you count 100 tens and units. 1, 2,
yes.
3.
2, 3, comma.
1, 2, 3.
2, comma.
So, without putting the second command like this, you already know that this is what? 4,030 what?
4,030 Satoshi.
Yes, perfecto, perfecto, perfecto. So now we have gotten this. So once you know this value, the next thing you do is that what? You come to your what? You come to your trading view. I'm expecting somebody should go to the new student group. You can see now. I've waited for every one of these students to come online. What? Somebody should. Email, we can't hear you. You're.
I get one to the west.
Can we mute our mic? Mute our mic. There's so much noise at the background.
Okay.
Mute our mic. Mute our mic.
All right, so let's continue. Having muted everyone, so the next application that you want to interact with, once you know how to find cryptocurrencies here and know the market that is selling. So if I go to this market, it means if I go to this market, this Bangkok market, I will what? I will see Lira token to buy. That's basically what it means. So I'll come to Bangkok, I will search for it. But how do I go around buying that cryptocurrency from what? From Bangkok? Because if I go on Binance, you can see the cryptocurrency is not what? You can see the cryptocurrency is not on Binance. You can see the cryptocurrency is not also trading on what? On Bybit. So it's not every cryptocurrency that's on Binance. It's not every cryptocurrency that's on what? On Bybit. That's why there are two types of exchanges that you must be interacting with in this particular course. It is the centralized exchange and the what? The decentralized exchange. For the centralized exchange is the one that you have it as your Bybit, your Binance, your Gates.io. I have sent you link to register for these particular exchanges. If you've not gotten your link to register for these exchanges, message me at the end of the class to get your link to register for these particular exchanges. That's for the central exchanges. The second one is the decentralized exchanges. And that's the reason why I said you should download a decentralized wallet. The decentralized wallet that I said you should download, I said you should download MetaMask. I said you should download MetaMask. Because the reason for MetaMask is this. MetaMask is an EVM compatible wallet. It's an Ethereum virtual machine compatible wallet, an EVM compatible wallet, and it has interoperability across a few number of chains. When I say interoperability, I mean it has the ability to work or to move around these different number of chains. So if you've downloaded your own MetaMask, we'll get there shortly. But before we get there, let's move to, so the next thing you need to set up now, choice. I hope you have set up your trading view. If you have not set up your trading view, I told you to download it from the list of apps. So ensure you have it downloaded now and ensure you are opening up your trading view. When you open up your trading view, you will see something like a plus figure there where you have like this, something like what you are seeing here, this addition symbol. Can you see that add symbol? You are going to be adding some cryptocurrencies to your trading view. You are going to add some cryptocurrencies to your trading view. So when you add those cryptocurrencies to your trading view, this is what you will find. You'll find your watch list being populated like this. Now, when you find your watch list being populated, I want us to check on the chart of Bitcoin and Tether. Now, a couple of you might be looking at this particular trading view and be thinking that, okay, it is so strange. I don't know the interface around it. But please hold on a bit. We are going to learn the interface around it and what each button mean with the trading view and how you can do you can get it. Do not be scared as soon as you are seeing my chart like this. Your chart might not come out like this in the first place because your chart might not have all the technical indicators that my own chart is having at the moment. So we will need to make this particular chart a bit simpler by converting this chart to a naked chart. Now, notice how I want to make this chart simple. Notice I'm deleting some things from the charts. I will click on somewhere in the charts. I want to delete this from the chart. So I click on it and delete it. I want to click that on the chart. I click on that tool and delete that particular tool. So last week, this was about where we ended. We were looking at our very best technical indicators and how to apply. That's on Tuesday, rather, for Tuesday classes, and how to apply it for our students. So we established that this trading view is our diagnosis platform. This is where we diagnose. Whoa. Okay, we established that this trading view is our diagnosing platform. The reason why I'm doing whoa is because I just saw now that Bitcoin dropped a few days ago from this 20,000, right, to about 18,000, and that means it just broke structure. Hey, can you tell me what this type of structure is? If you break this type of structure, when you break this type of structure and you break it lower than the former structure, what type of structure is this when we're looking at resistance and support? Onome, can you remember that this has formed the what? This has formed the what here? What is this? This has come to form a what? Hi, can you guys hear me? Hi, can you hear me? Hi, Onome, can you hear me? You can unmute. I need to see if you can still remember. Hi, guys. So on this our naked charts, we just broke this particular structure. we just broke this particular structure. Now, remember this point where I'm trying to ask some people on this particular call what this structure of this chart is, and they are not responding to me. By the time I've explained it to you, please ensure you do what you're able to respond to me, because you can see this structure is broken already. If I take a horizontal line, I want to take a horizontal line here. Watch this. Watch what I want to do. I'll take a horizontal line now. If I take a horizontal line, if I place my horizontal line here at the tip of this candlestick, you see, can you see that structure is broken? That's left. This is, I was talking about here, the tip of this place. And you can see this has dipped below what? Below that particular what? Horizontal line. So ideally, this is called a naked chart. Ideally, this particular type of chart is called a naked chart. You need to plot this particular chart for you to know the direction where your chart will go, whether it's going up or it's coming down. No, last week you said this particular chart was coming down. Oh, no, it was last week on Tuesday you said it was coming down. Today is what? 8. On Tuesday was what? 6th. We were looking at it on Tuesday as at about what? 15, about 12 p.m. So you can see, as of that time, we're here and we look at it and we said this chart was what? Coming down. Ehime, I think you also said this chart was coming down on that day. Melly said the chart was going up. Where is Melly? Melly is not here today. Melly is not here today. Somebody should message on the Choice, message on the new student group. Tell all of them to join. 050688 050688. So it is actually not most times on this particular training curve, it's not really a function of your tutor. It's always a function of you having to keep out time for it. So now let's quickly shoot. On the last class, which is on Tuesday, you guys said it was going down, and truly it went down. If I go to the trade house, there was an update we posted in the Verm trader, that's in the signal room. In the signal room, we said that Bitcoin was not looking good and Bitcoin was about to what? Come down on that particular Tuesday. You can see it. BTC, make nobody lie to you. This does not look great at what? At all. At about 12 p.m. And instantaneously, what happened? We dropped. So you being able to also look at the information on the what? On the signal room would give you an edge to being able to what? Gain as advantage of this market. So now, so even without your technical analysis or anything, we've done some part of the technical analysis for you. So if you have seen that type of message, you know that, okay, Bitcoin is going to drop. I don't need to be in any trade, because if it drop, obviously you will be losing what? You will be losing money. Our purpose here is to be able to guide you in the best way to maximize your profit and not what? Lose one single dime at all. One single dime at all. So I'm glad we're having more people joining us. So let's finish up what we're doing with this particular chart. So we established that it was a naked chart that day, and we said we needed to what? Place some good indicators. We look at the indicators that I wanted to place that day, and we came to a conclusion that these were indicators that we are going to what? Use as part of the guys that know how to do the Jagaban, this trading type of thing. We'll be using just these what? Indicators. We'll be using MACD, Relative Strength Index, Bollinger Band, and what? EMA. And then we decided that how does these indicators work? When you say you want to use an indicator, you need to know how to what? Add those what? Indicators. Currently, if you click on your indicators here, if you are using your phone, you will see something called FX. On that particular FX, that is where you will find your what? Your indicators. So these are the indicators you are going to be adding. You are going to be adding the indicator of Relative Strength Index, which is the RSI. We added it last week for the students that were here. If you're not here last week, please go back to the video, watch it. And you see, we added the relative strength index, but once we add this relative strength index, ideally, we're meant to be seeing just one line in this relative strength index. You can also increase it a bit by clicking on this particular scale button. You can see we only have this. So ideally, I'm meant to see one line. So I can click on setting and go and remove the other line. This line is not meant to be very visible to you. You can work on your relative strength index using just this one oscillator. So once you do that, you can see your relative strength index is there already. So you can minimize it now. When you minimize it, you can add the next one. The next one you're adding is MACD. Once you add it, because we left our last chart here, we have to get to this point now. Because of choice and Melly and a few of them will have to get to this point. Apologies for the older students. So have to go through this refresher memory stage. All right, so we have this as the next one we're putting is Bollinger Band, which is BB, right? BB, Bollinger Band. Just put BB and you find it there. BB, and you have it there. Okay. So if you have this done on your screen, can you unmute yourself and tell me and confirm to me that this is undone? Can you let me know that can you let me know if you are able to do this on your screen before we go forward? Because this is where we stopped. Confirm you have this on your screen and you can do this by yourself. Kindly unmute. I want to get feedbacks. Kindly unmute. I want to get feedbacks. I appreciate the feedbacks. Confirm you can get to this particular place on my screen because this is one of the most important things. This is how you are going to know if the chart will go up or the chart is going to come down. This is how you know if the chart is going to go up or is going to come down. Can any one of you get to this part of your screen? You can unmute yourself. Zoom user that raise hand. Okay. Hi, Lami, welcome. Lami, do you have this on your screen? Blessing, do you have this on your screen? Hi, Lami, do you have this on your screen? Can you do this on your screen?
Yes.
Last week, we ended at this particular point. If you can't get here, then I don't really want us to shoot further because it is important for us to be able to know how to get to this place. I can't hear the feedback. I'm hearing one tiny voice from the background. Stop raising your hand or mute yourself. Unmute yourself and speak to me. I want to hear your feedback. I want to hear your voices. Can you guys get to this particular point? We have just added only 3 indicators. And these 3 indicators are going to be our base points to push ahead. Is there anybody that cannot add these 3 indicators? Please let me know now or remain silent.
Yes, sir. I cannot add it, sir.
Okay, you can't add it, right?
Yes, sir. I came in late and I don't really understand it. It was difficult for me to join the meeting.
Okay, welcome. Lami, in our last class, I know you were here in the last class, and I know that I sent
Yes,
in the recording for the last class, which we added all these what indicators. It then means you and Choice, you did not watch the video of the last class. Blessing, you too, you not watch the video of the last class. Blessing, I just joined on my screen. I'm going to
yes, sir.
I'm clearing my this thing, clearing my screen this thing for you. So that you need to go and watch the last class. But regardless, all you need to do is have a list of the indicators, like I showed you earlier. Have a list of the indicators, just like we have the list. These are the major indicators we are going to be working with. These indicators that's on your screen. And I added only these indicators. You can add 1 million type of indicator, but it is not the best. Your chart will be so confused, right? You'll be just confused. Not the best. So highly professional, less is more actually, less is more. The simpler you can keep your charts, the more you can actually be able to get the information accurate. Like if not for these other ones you are seeing at the bottom, my own chart is as simple as this. My own chart is as simple as this. With this, I know what is going to happen in the market next. With this, I know how to play this particular part of the market. And I'm about to show you. Hi guys, stop drawing. I'm going to tell you to stop drawing. Okay, so with this alone, I'm going to be able to know what to do with the charts. So let's quickly. This meeting is going to end now. Please, guys, kindly click on the same Zoom link meeting and join. This meeting is going to end in the next few minutes. Kindly click on the same Zoom meeting that I sent to you earlier and join. I'm looking forward to seeing you guys in the shortest space of time. If I am to, so that's for the relative strength index. That's for the relative strength index. For the MACD, let's finish this particular theory indicators today so that we don't have to come back to it in our next class. For the MACD, how do we use the MACD to determine if we are going up or if we are coming down? The MACD consists of two lines. The MACD consists of two lines. These are very important two lines. It is not so difficult. Just as you are seeing, you have a blue line and you have an orange line. So let's break it down. From this, your picture, you have a blue line here, you have orange line. You also have green histogram. You also have red histogram. Don't mix up the colors. Understand this alone, that whenever this orange line is on top of this blue line like this, and it is falling down like this, you always have red candles in the market. If I am to do this now, you will see that this movement created a red candle in the market. And whenever the orange line is at the bottom like this, just like you have it running up like this, and you're seeing this green histogram, you are having a red movement in the market. Remember the meaning of MACD is moving average convergence divergence. Moving average convergence divergence, which means it is converging and it is diverging. When something is converging, it means it is coming together. When something is diverging, it means it is opening up. So these two lines, they come together at a point in time, like here, they are coming together here, and you can see they just opened up here again. They came together again, and they opened up here. They came together again, and they opened up here. So whenever they come together and they switch, whenever they come together, they always switch the direction or the momentum of the market to the opposite direction. Now, for this particular one, what we have now is that for this particular one, what we have is this. We have in comparison with our charts, we have you can see at this point where it is coming down, where the orange line is on top, you can see the downward pressure, you can see the markets, you can see red, Abby. Red everywhere. You can see at this point where it switched and the orange one was at the bottom, you can see what it went up. Go back in history. If we go back in history, you can see once this orange line is at the bottom, you can see what upward movements. You can see once the orange line is on top, you can see what downward pressure and downward movement. So all you need to do is try to determine in this current day and time, in as of September 8th, 2022, in the year of our Lord, what is going to happen in the market? Is the MACD about to switch in such a way that the orange one will be under and the blue one will be on top? So let's look at it closely again. From a one-day time frame, is the MACD about to switch? Is it looking like this histogram represents volume in the market? So because this histogram represents volume in the market, when you find this dissipation, it means that volume is entering into the market, or volume is leaving the market. So currently on a one-day time frame, we'll see that there is a dissipation towards the upward side on this MACD side. So there's a high possibility that this is about to switch for so that the yellow one will be under, just like we have here, and the blue one will be on top. And if that happens, it means that we are going to be having a little bit of upward trend in the market. So we'll be having a bit of a green candle in the market. So if that happens, that's what we are going to be having in the market. So that's how you use your MACD to actually read your charts. The last one we would look at for today, before we call it a day, is the Bollinger Band, which is the BB, the Bollinger Band. You can take it off like this. You see, that's how normally your chart is. Your chart does not have a Bollinger Band. So you're going to add BB for Bollinger Band. So when I click on that, now, the Bollinger Band is one of the easiest ways to actually trade and make profit. Because all you need to do is look at it. The Bollinger Band has only 3 lines, 1, 2, 3. An outer line, which is at the bottom, an outer line, which is to the top, and the middle line, which we call an exponential moving average type of line. You can make some editing to your Bollinger Band metrics and know what you want to see there. Right? Choose the length of your whatever, but this is the default of it, and this is good enough. So I want to switch this a bit. Remember, technical analysis, that's what we're looking at again on this particular chart structure, how to be able to use your technical analysis very well. Right? And note there's something that is very constant in this chart. Anytime this candlestick comes to the bottom of this Bollinger Band, can you see it? It will rally up to the top of the Bollinger Band. Once it shoots out of the top of the Bollinger Band, once it shoots out of the bottom, it will come and shoot out of the top. Once it shoots out of the top, it will fall again. Now, once it falls again, and you can see this middle line. This middle line serves as a support. So anytime it is falling and it is not the body of the, if it is not the body of the candlestick that cuts across this middle line, notice it is not the body of the candlestick that cuts across this middle line. If it is not the body of the candlestick that cuts across this middle line would always support it. and what bounce back. But once it is the body, like, so this now, just imagine like this one now, came here, shot out. Once it is body that cuts across, you can see it falls back. So once you see this Bollinger Band, this is how you read it. Once you are here, once you're at the bottom of the Bollinger Band, which is this particular point, you have to buy. Once you're at the top of this Bollinger Band, you have to what? You have to sell. Notice how no one has ever survived not selling at the top of this Bollinger Band or at the bottom of this what? Bollinger Band. Notice that there's no candlestick that is coming out of the Bollinger Band that is somewhere around where this my mouse is here. So you must follow what? Principle. So you see, when you see this particular candlestick now, short out of the bottom of this Bollinger Band, you do not need a soothsayer to tell you to what to buy. So as of January 2022, you could have bought it when it shot out of the Bollinger Band at $32,000 and wait to come and sell it at what? $47,000 dollars. Then when you sell at $47,000, you wait again, it will fall down again. You see here that we are touching now, you see it as what? $38,000. You'd have bought it again to come out what? $47,000. Right? So let's see if this theory holds true. If this theory holds true, even when we'll go back in history. So back in history, we are currently on February 2021. Can you see here? Even in 2020, short out of the Bollinger Band, buy. Short out of the Bollinger Band on top, sell. Moving average supports. You could not hold that, it broke the structure. Short out of the Bollinger Band at the bottom, buy. If you shoot out of the Bollinger Band at the top, you sell. You shoot out of the Bollinger Band at the bottom. If it comes to the Bollinger Band at the bottom, you buy. So someone might be saying currently for Bitcoin in the large macro, which is a 1 month time frame, you know, I said it is best to look at these things from a longer time frame so that you would remove all the noise from the chart. So from a longer time frame, look at Bitcoin. This is Bitcoin. This is the chart of Bitcoin since what? Since 2017. Now, notice in this part of the Bollinger Band, can you see when it was down here, right? Buy. When it was on top of this thing, what? Sell. It came down, broke down to this place, what? Buy. Right? It went on top of this place, sell. It came back, this was a middle line. This middle line had this particular structure support for it. That's why some people now what bought. It came back now, short out of the Bollinger Band. Can you see it? When it was here, if you look at it from this 1 month time frame, if you see this, nothing should tell you to what to buy. All you have done is to sell this market, ride this market from the top here, ride this like a good, interesting, nice Mercedes Benz down to the side. So now that it is at this down point, you can see while we are waiting for it to do one more last draw of blood. That one more last draw of blood, you can see the candlestick. You can see this candlestick is forming already to this downside, to this place. So at this point, if you are buying Bitcoin at this point, you are buying at a good point where you will be waiting for what? For it to what? Go up to the next part of the Bollinger Band for you to what? Sell. Sure. Mind you, Bitcoin was $68,000. It's not $30,000, so it's not even $20,000. It's $19,200, which means like half. Bitcoin is at this same price. Bitcoin was at the same price 5 years ago. 5 years ago, look at it, in 2017. Bitcoin was at this same price 5 years ago. So the asset is currently very, very discounted. 5 years ago, that was when Bitcoin was at this same price. So the asset is very, very what discounted. So it is actually almost a very good time for you to be looking at loading up your bags for this particular what type of assets. So on this particular note, I believe that you guys must have understood how to be able to use these three different indicators. And Lami, you're raising your hand. Kindly unmute yourself and let me know. Speak so we hear you.
Okay. Okay, hello, sir. Can you hear me?
Yes, I can hear you, Lami.
Okay, sir. Talking about the Bollinger bound, right? It's the both the blue line at the top, the orange line at the middle, and the blue line at the bottom. They are all Bollinger lines, right?
Yes.
Okay, sir. Okay, here's my question. Now, at some okay, so for you to know when it's good to buy, which of the candles, is it the red or the green candles that should go down the Bollinger bound, or the green candle?
So sometimes so let me tackle that your question. Look at it now. For this one, you are saying which of the candle should go out of the Bollinger Band, either the outer line for the top side or the outer line for the downside, for you to know which one to buy. You know, once it is going down, right, it is always characterized by a red candle like this.
Yes. Like
And
this
once it
one.
is starting to pick up, it is characterized by a green candle like this because it is going in the positive direction. So we cannot really base it on that particular metrics. What we can base it on is looking at the region and seeing that, like at this particular region now, you can see this particular region, we're on a 1 hour region, 1 hour time frame. You can see on this 1 hour time frame, right? So for someone that was trades short term as of this time yesterday, as of 8 p.m. yesterday, the person would have seen that this thing is out of this Bollinger Band already.
Yes, sir.
So that trader, which is a day trader or a 1 hour type of trader or a short-term trader, we know we've not gotten to 8 p.m. now today, right? So
Yes,
the
sir.
person is meant to have left this market since that 8 p.m. yesterday. As you can see, the market has been what? Coming down, turning on your own. It's just turning on your own. And we said the market is going to turn on your own. So the person should have left this market and now wait for this thing to leave this top of this Bollinger Band to what? To about the bottom of this Bollinger Band to make the profit. So when it has gotten to the bottom of this Bollinger Band again, the person is trading on the 1 hour. The person can now look for a way to enter it at the bottom of this Bollinger Band, say something like here, at the bottom of this Bollinger Band again, something like here, to be able to make profits when it what goes up again. Do you understand? So you look at the
Yes.
region as it is shooting out to be able to actually do that. The candlestick might, because the candlestick, that's like you see this one now, the red shot out, the green
Yes.
started going up. Just like you see this one, the green shot out, obviously is the green that was going up before. Then the red started what? Coming down. So we might not use that style of categorization for it. Let's be able to generalize it on one that is very simple and straightforward. That look at it, oh, you don't shoot come out of here. Yes, it don't bust. I need to buy. You don't shoot come out for here. Yes, it don't bust. I need to what? I need to sell. Do you understand? This is just be as easy and straightforward as that. So you look at it as this, as the candle shot out of this particular part of your Bollinger. Yes, it has shot out. I'm getting in with all my money. As the candle shot out of this part of the Bollinger, yes, it has shot out. I'm getting out with all my words, with all my money. Is that clear and straightforward enough?
Yes, it is. But sorry, sir. Okay, fine. I understand that on a on a norm, you need to buy when it's low and sell when it's high. Now, I saw that in some yeah, somewhere around, yes, here. I saw that both the uh red and the blue, or the, yeah, green candles, they're out of the Bollinger bound, going high. The both of them, both the red. So you can use any of the candles, in other words, right?
Yes, so if you
Okay.
notice these two that came out of the Bollinger Band and is going high. So just like I said,
Yes, sir.
the reason why it went high in the first place is because you opened your shop at $1,000 today. You now made
Yes, sir.
$2,000 by around
Yes.
7 p.m. But you are meant to, somebody, God forbid though, not you, somebody now is meant to close by 9 p.m. after opening shop, making profits of $1,000 for the end of the day. Before 9 p.m. at 8:30 now, so if you have church by 7 o'clock, it's of you to go to church. They say, no, I will not lock shop, or I've made money, but I want to make more. Greed. You now say, okay, you are seeing, it has shot out of Bollinger Band, your pocket don't full, you said no. And instantly before 9 p.m., the candle starts what? Plummeting down. Now, your money that you have made, you started from here, $1,000. You started from this point, $1,000 to $2,000 here. Now the money now starts dropping. Because it is dropping, or because the money it must come out as this type of color, which is a red color, which is negative. Whether money goes out for fuel or for your health or on your bank account, it's always red debits that it always causes. So
Yes, sir.
so once that depreciation is happening in the market, you see the red candle fall, and you can see it now fell way below. You were having 2K before. Now you see it did not end there. Started falling on your own. Fell way below what? The amount you were having. So it is very good for you to do what? To take those type of precaution. Is that understandable?
Yes, sir.
All right. So we've had a very long day in this particular class. So with this particular understanding, the topic we are going to be taking for next week, we will, and I know how to reach out and analyze the crypto markets. The topic we are going to be taking for next week is going to be centered around some of our engagements with centralized exchange and decentralized exchange. I'm going to post something now in the traders for us to buy on the Arbitrum network. So please, every one of you, I want you to look at a way to set up your MetaMask. I set up a MetaMask. Set up a MetaMask so that when I finish posting what I want to post, you can what? You can make profit from it. All right, guys. So have a nice day. Cheers.
Okay, bye.
Bye. Bye, everybody.
Okay, Roman, thank you so much, Roman. Thank you very much, Roman. Have a lovely afternoon.
All right. I hate to call you daddy. I'm the daddy.
Bye.